64 pence sterling.
Well, let's get Rod North's tip on whether interest rates are going up or down or just staying neutral. He's the Executive Director at Bourse Communications. Rod, great to see you.
Good morning.
So, are you in fierce agreement with Paul or not?
Well, I think what's going to happen is, the Reserve Bank really has a choice, doesn't it? It either can take a preemptive strike or a reactive strike, and I think probably what it's going to do is wait for the key inflationary data that will come out at the end of this month on the 24th of October, and also there's key China data coming then as well. So I don't think we're going to see a drop in rates today from the 3.5% cash rate that we're currently sitting at. I suppose there's only 5, I think, out of 24 economists and analysts sort of tipping that there might be a cut. We have seen over the course of the last few weeks, particularly with companies reporting and so forth, particularly a lot of concern in that retail sector where we saw the David Jones result, down 40%, Kathmandu down 11%. So I think there's a reality check going to occur at some point. But in the past, if you look at how the Reserve Bank has reacted, and certainly when you read the minutes for the last policy meeting for last month, you see that the door's certainly open, but I think they'll wait for official data.
Paul Bloxham was saying earlier to me that he felt that even if there was one more cut, it's close to the bottom of this cycle. Do you believe there's much scope for the Reserve Bank to go much lower, say below 2% with the official cash rate?
I can't quite see it coming down to 2%,
3%
but I've got a view that, yes, I think you could see it coming to 3%, because I think we've got that bit of a game that comes on. If the cash rate is lowered, say, next month in November by 25 basis points, we've got that issue of whether the banks will pass on the 25 basis points. So there's a chance that the Reserve Bank could take the view that it might give a bigger cut in November of 50 basis points, which will then mean that it effectively forces the banks to at least deliver 25 basis points. And at the end of the day, what we want to see with a cash rate lowering is stimulating the economy. And there's always that issue, if the economy ever gets overstimulated, the Reserve Bank's always got that ability to put the rates back up. But, there's been pretty clear evidence for months that the non-mining and resource sector is not reacting the way it should be. When people are not spending, retailers are suffering. Because of a high dollar, the manufacturing sector is also suffering. I think there's plenty of anecdotal evidence there to show that. So
and that's evidence in the inflation figures too, isn't it, really?
Yes, and then when you look at the inflation figures that came out, unofficial figures came out by TD Securities yesterday, putting the inflation rate at around 2.4%, which is between that acceptable band of 2 to 3%. So, all the sort of signs are there, but I think it's just that official data that's pretty key to what the Reserve Bank may use to make its decision. And, of course, November is always a month where something happens. If you look back in history, it's either good news or bad news in November from the Reserve Bank. So we're hoping that we might get that cut in November.
And briefly, markets today, how are they
Markets today, on that positive lead on Wall Street, I'm expecting that we'll actually see, it was a bit lonely yesterday because only Melbourne market was open, but we're expecting to see probably the market rise about 20 points today off the back of a stronger Dow last night. So good news for the Australian share market today, hopefully.
We hope.
Thanks,
Keep
Rod.
the fingers crossed.
See you soon. Thanks, Rod. Coming up, our disappearing barrier reef.